Good morning. Welcome to the Brew. Risk Wranglers, Derivative Desperados. We are here in sunny Palm Beach, Florida. I'm not on vacation, believe it or not. I'm at a convention. It's the OIC, which stands for Options Industry Conference. It is the largest annual conference in this options industry, and it has been going on for, what would you say? What would you say, Don? 43 years? I think 43 years it's been going on, and it's always at a different venue. And some of the fun of this is bringing it back. Next year is where the destination will be. So let's bring out Jason right now and talk a little bit about this because he is an expert on the OIC. So Jason, come on out, baby. You crazy cowboy.
I mean, crazy cowboy. I'm an expert. I go once.
Well, I will say I embellish a little bit. You've only been once, but from your perspective, give the folks some color on this one, because I think you got a lot out of it, and I know you made a great connection with Henry. It's a big networking event, right? Would you agree?
Oh yeah, I mean it's good for like option kind of insiders. I mean, it's not really a retail event. It's good if you are like a hedge fund, broker dealers. There are a lot of broker dealers there. And I did connect with the CBOE with Henry there. That's where I met him. But I went because at the influence of Tradier with you guys. So you guys kind of got me down there, you, Peter, and asked if I would go, and I kind of hung out with you guys and made great connections there from like in options. And I didn't get like customers or anything like that or subscribers, but I kind of showed my wares. Spider, the woman from Spider Rock. I'm like hesitant to say anybody's name, but
well, it's okay. I mean, it's all publicly disclosed. They're all on the attendee list.
But yeah, so I mean, I went in Nashville. What was it? Not last year.
2 years.
2 years ago. Yeah.
No, it was last year, right? No, 2 years. Sorry, last year was Asheville.
Right. Yeah. But yeah, I saw you guys in Nashville, NASH, 2 years ago, and that was it was a great experience, and like I learned a lot about what we actually built with Volland. It was
right,
and it was intriguing to a lot of people there. That's where I realized that not many people had it.
Yeah. No, so what's great about it is, look at everyone says what a boondoggle, and to some degree it is. There's a lot of socializing, but the day's structured. So every day, obviously there's going to be a breakfast, and then there's going to be some sort of general sessions, and what all that means is that there's panels. So there's always some group of experts in the industry who will discuss a hot button topic, and we're going to talk about a couple of them today here. That have come up at the OIC that are interesting developments in the industry. So they have panels on that. They have experts. A lot of my colleagues from the industry over all these years are here. So it's nice to catch up with them, see what they're doing. And the best thing is that SIBO does actually a great job with presenting data. And Henry was on his best. And as a matter of fact, I'm looking over to here and I see Henry walking toward me right now. I think he's having a meeting though, so that's pretty funny. So he had some great data, and it's always interesting to see the state of the industry relative to data. So they do talk about retail a lot. I would say one of the hot topics this session was they really focused on retail trading and a lot of zero DT. So here's topic number one that's super important. I think the NASDAQ has filed a what's the word? Request with FINRA SEC. I don't know which one of the two, to extend zero DTE to stocks. Now the stocks are the Mag 7 plus 1, which is Broadcom. So what that means is that if it goes through and they approve it, they will have zero DTE in that group of stocks, and you know what that means ultimately.
Monday and Wednesday.
Yeah, it's gonna go everywhere. I think the first proposal was Monday and Wednesday, and then obviously it's gonna go Tuesday, Thursday, sometime if it passes, right? So.
Yeah.
And folks, if you're watching this, feel free to comment give us some comments on that. What do you think about it? Jason, what are your initial thoughts on that? Do you like it, not like it, and why?
I mean, my thoughts are mixed. I think that the biggest hurdle is it's not so much the delivery, because that's always been a case, but SPY has zero DTE and that has physical delivery. So you're going to get shares if you do zero DTE on SPY and QQQ as well, which already exist. I think the big thing for me is earnings reports.
Yep.
And like most of those Mag 7s are after the market on like a Wednesday or a Thursday. And if there's any kind of inkling on earnings reports, they're going to exercise those options and really kind of hurt retail or exercise it immediately.
Yeah.
It's the other thing that's true is kind of more idiosyncratic, like risks. There something comes out. Obviously with tech it's a little bit different, but
sure.
But if there's something, let's say a biotech catalyst or something that's risk, that's an idiosyncratic thought to the individual company, and it comes out just after hours, there is that exercise risk.
Yep.
So I think that's the downside. But the upside, especially for institutions and dealers, is a lot more granular hedging on equities that have equities that have a lot of traffic on them. And if trying to hedge or reprice options that only expire on Friday when something's happening on Monday and Tuesday is a little bit tougher. So from that standpoint, I like it. The thing I don't like is that exercise risk from idiosyncratic.
Yeah, so that's well said. I think a lot of those sentiments are the common sentiments down here. One of the things that NASDAQ put in the proposal or the request is that on earnings events, you will not be able to exercise those.
They're not going to have them.
They're not going to have them.
Yeah.
What do you mean?
They're not going to have.
Who is that?
It's Paco. He's my assistant. What?
They're not going to have them on the day.
Oh, so they're on the days of earnings. Sorry, I was wrong. On the days of earnings, they are not going to have those listed. So there will be no zero DTEs on earnings dates in those 8 issues, the Mag 7 plus Broadcom.
All right,
so that's how they're going to get around.
Yeah,
that's how they're going to get around that issue. Now, it sounds clunky to me. I think one of the other things too, what I think from if I were to put on a brokerage hat, which I can't do, is that from a risk standpoint for a broker dealer or, a retail broker, you now have exercises, 2 more times during the week. People get exposed after any kind of news. Think about if Trump tweets something after hours on Tesla or Elon Musk, and all of a sudden that out of the money option that the customer thought was not exercised becomes assigned, and now he's stuck with short shares on a call side or the opposite on the put side. That's a problem, I think. And it's going to put some little strain and pressure on the broker dealers to kind of manage that sort of exposure. So, but otherwise, I think and the other thing that came up too, I should say before we move on, is people have talked about cash settled stocks like SPXs, which is also very interesting. Will the commission go for that, or anyone go for that? Probably not. At least not now. So, which would kind of solve some of those issues, right?
It'll solve some, but then it'll hurt others, because then you have, if you're not getting physical delivery yet, as a dealer, and you're hedging with the underlying, so you have like shares of Apple and you're getting cash, but then after market you get a movement, so you still have that kind of jump risk,
right?
And actually it makes that jump risk a little worse. But overall, though, I mean, I think if these things can get worked out, I think it would be good, but I think we might.
Yeah, we'll see. I would say, though, for the tenor of the people on the panel, because NASDAQ was on the panel, was it kind of what we're saying here. I think they're just a little bit in the middle of yes, I like it, no, I don't on it, for the reasons we've elucidated here.
Yeah.
So it's interesting. I think the real pros and experts feel similarly. Okay, topic number 2. What do you think it is? You want to guess?
Option volumes.
That's topic number 3. So topic number 2 is pattern day trading. So it has come up. It was not the sole topic of any panel, but it was part of a topic on the panel that I introduced, which was the retail trading dynamic landscape kind of thing, the evolution of retail trading, what's going on there. So JJ from Tasty did mention it in his introduction, or actually I take it back during the call, and he stood out strongly that it is a very, very silly, antiquated rule that actually hurts the end retail user, especially the smaller person with $25,000, less than $25,000 in their account. And you can imagine all the reasons. So what do you have a thought on this one, Jason?
Oh, I think it's ridiculous too. It's
okay. And why so? What's a couple points of why it's ridiculous? I'll give a couple too, but what's your thought?
So I think that when you are a small time trader and you're trying to be disciplined in your risk, and you go in and maybe something happens and the market moves fast and you're coming out, you're now limiting the amount of you're limiting your ability to stop out. You're getting yourself in trouble, like
right.
And it's hindering risk management. Yes, it's also stopping people from going in and out, but is that really a problem? So
No.
that's my I don't know what the problem is that they're fixing with pattern day trading. I do think that it can definitely hinder retail risk management, though.
Yeah, no, I those are good points. I think you're exactly right. And JJ's comments were very similar. So yeah, and I actually the FINRA asked for comment on this, and I wrote a piece on it to FINRA, and I know a lot of my colleagues did as well. But those are good points. Options are risk management tools, as you said. They need to be rolled frequently. Sometimes frequently, sometimes not frequently, but they need to be rolled almost all the time, or closed and moved, and that sort of thing, right?
Yeah.
If you were restricted in 3 closing trades in a 5-day rolling period, that's really tough to do. And now that they've introduced zero DTE, which is one of the more popular things that people trade every single day, it puts at a disadvantage that small person with a smaller account, I should say, trading those zero DTs. So only the big guys can trade it because they can get in and out of it. And it's a very much a open close kind of product with a 6.5 hour lifespan. So that I just think is silly. Plus broker dealers now have unbelievable know your customer sort of behavior. So, for the most part, I think that's kind of cleaned up amateurism. I'll use that. So that helps a lot. And the market structure is totally different. You have massive liquidity out there for people to trade on. And that's because of the growth of retail and market making community being able to listen to pings of trading and create great sound curves and theoreticals based on that flow that's back and forth. And if you don't have that back and forth flow, that disrupts the great pricing models that are out there. So it really, and I don't think the commission understands that. I really don't. But one of the things that Kinahan said is that he had a little talk with one of them here. And by the way, the regulators are here, and they do present. So there's a Washington D.C. component. But they said, we didn't even know after you explained that's how it's behaved, and they were like dumbfounded that's what's going on. So
usually those regulators are the most boring. That's the most boring panel to sit there and listen to that.
I know, but it's
it's funny that those are, I found anyway, those are the least, I guess, sophisticated and educated people at OIC.
I agree. That's a good point. But I think the good news is I think we're going to get some movement on it. I don't know how it plays out. I don't think we've had any indication of what the final landing place is for it, but I think there's going to be movement. I really do. I'd be surprised if they didn't just completely eliminate it, but we'll see. So that's good news.
One question going back, the options that the zero DTE on the stocks, is that going to be NASDAQ exclusive?
Paco, is that NASDAQ exclusive, do you think? No, I don't think so. I think it's industry.
Yeah, it's just
Okay.
based on symbols.
That's
Yeah,
good.
it's based on symbols. Yeah, for sure. Okay, third topic. Ready?
Ready.
Volume. This is right up your alley. So Henry did his thing. Henry Schwartz of SIBO. He's the flow master. He always has a great handle on what's going on in the industry relative to volume. So obviously, average daily volume system-wide is up this year, right? As you can imagine. I think last year, I'm going to round number this. Last year, average daily volume ended up about 45 million per day, includes indices and equities. This year, we're looking at, in the 55 million range on average daily volume, give or take a few million. And we've had our first 100 million contract day this year about a month ago on one of those crazy days. So that's just insane, right? So it's up like 25% from last year. And Henry said that if it continues like this, they could do 15 billion contracts this year, which is also insane. So, I mean, look, that's insane in a good way. It's, people are trading. Two key points that I'll get you can weigh in on this. What we've seen is with this volatility of late, we've seen a little bit of pullback in retail. And some of the dealers here have said their touch point with retail has also declined a little bit. So it seems like there's really good volume, but retail has kind of, pulled up the 10 a little bit. Any thoughts on that one before I go to the next one?
Yeah, I mean, I think it's, when it's volatility, you get burned once or twice, you gotta pull back. I mean, it goes back to, retail's actually not as they're not as incompetent as regulators seem to think they are.
Right.
And retail needs to adjust their risk. They need to volatility when especially if you're an option premium seller, but even if you're an option buyer, those prices go way up, and all of a sudden, in order to get that 30 delta is now 100 points further away from the money on SPX than so that's kind of a if I'm retail, that would be in my mind is
the risk. Oh, that's absolutely right. So it's interesting. I was talking to my brother was a former pro like myself, market maker, and he trades a little bit, and he said he's not even trading. The straddle, the 1 day straddle at one point in SPX was like $200.
Yeah.
Like, are you kidding me? $200 straddle? That's insane. And he says you still lose on it. So it's pretty funny. I think those are good points. When retail gets whipped around like a little bit of a ragdoll, they're like, okay, 30 handle VIX, I'll stay away for now. I'll get back in when we get some sanity, right? Which seems reasonable. It sounds logical. Next big thing, our last little item here before we say good night and goodbye is Henry showed a slide of spike volume in 0DT SPX, was it, Paco? SPX. So what was unusual is that the spikes, think of a sawtooth on the graph. The spikes occurred at, let's say, I'm just making the numbers up, but 10 o'clock, 10:15, 10:30, 10:45, 11 o'clock, 11:15, etc. Didn't show up at 10:01 or 10:03. They were systematized at the evens and the 15s or fives, right? What do you think's going on there? And the panel had a good guess.
Bots.
100%. So, and that's what Henry said. He says all these bots that are in the marketplace now, they're programmed to go in, let's say at 10 o'clock and 10 o'clock Eastern time, give a half an hour to open up and get everything settled and then run your first bot at 10. So the retail people are doing this, turning on those bots, and they can put in 10 o'clock and then they can put in 10:15. So no one's putting in 10:13 or 10:17. It's putting in 10:15. So it was amazing in the graph, and everyone's like started laughing, and Henry was cracking up because it was just amazing that the little blips at the evens and the fives all the way through. It's amazing. So we talked about it last night with the ORATS people who are here, and Matt said that, why doesn't someone put it in? We make them so there's 10:12, 10:17, 10:36, start faking everybody out. So we'll see how that plays out. But I thought that was pretty funny. So
Yeah.
what else? Anything? What else is going on this week? FOMC was yesterday.
Yeah, FOMC was yesterday, and it looks like I guess there was a Trump trade deal this morning.
Yeah. So it sounds like there's some tariff kind of talk with the UK. I think it was.
Yeah.
Okay.
But the UK only had a 10% thing, so I don't
Yeah.
know.
It's no
I don't know
biggie,
if
but
it's going to be reflective. But
yeah. Okay. Cool, man. Well, that's good. I'm gonna run because I gotta go kiss babies and
Sober
press
up.
flesh.
You got to sober up.
Yeah, I gotta sober up. So I will see you next Thursday. I'm gonna go get some more information. I think there's a Washington D.C. panel day. I'm not sure I'm gonna be able to stay for the whole time, but we'll
Well,
have
if you
some more
need a good
info on
nap,
that.
then there you go.
That's called napping on the plane, right home. Yes. All right, man. You have a great weekend.
Right, see you later.
That's a wrap. See you next time on the
See you later,
Brew.
Lex.
Bam.
Happy trade.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.